So if you turn in the handout, this is the chapter 1 handout. Turn to page 4. And I'm just going to do it on the handout, but again, however you want to do this file. Okay. So let's take a look here. I gotta move this way. All right, so what we're going to do on problem number 4, same thing as we did on problem number 2, the same kind of thing. We're going to do the income statement, same retained earnings, and the balance sheet, and the same kind of format. You can jar the memory a little bit as we go through here. Okay, so income statement. We start out with revenues. And as we go through here, there, last one's revenues. Next thing we go through is expenses. And the expenses are wages and utilities. And I'm going to put that in as a negative because that's money going out. I don't think there's any other expenses there. Okay, so we get those 2. All right, so this is the money that came in. We talked about this last time. We're good to go over it. So this is the money that came into the place, and this is money that went out. And by the way, in case you're wondering, a lot of times the revenues, there'll only be one line or maybe 2 lines in revenues, and there may be, there could be dozens, if not hundreds, of expenses. And the reason being, most places make their money one way, or usually that's the case. For instance, Ford sells cars, and trucks, so that their revenue would be one line for that. Now, the cost of selling all those is huge. It could be, like I say, literally hundreds of lines, but they only have 1 or 2, maybe. Maybe they have some financing division or something. But for the most part, it's not uncommon to see these have 1 or maybe 2, whereas the expenses, there might be a lot of them. Okay, we gotta see what our net income is. Turn the calculator on first. Write that down, you guys. Turn the calculator on first. All right, 22,500 minus, move the camera, 4,000, I mean. Excuse me. Okay, so this is our net income. Check that again just to make sure. Okay. And again, so this is the amount of money that they made. And when you're looking at a business, this is the most important number. is this net income. You know, people look at revenues and that because it's the biggest number, but really the net income is what you're really looking at, because this is the money that you actually get to keep. You know, you could have big revenue numbers and pay it all out. So, but this is really the important number, is the income. In the news, a lot of times you see revenues listed a lot more than, I think, just because it's a bigger number. But anyway. Okay, so that's the income statement. Go on to retained earnings. And retained earnings, as you may expect, it starts with, oh, here it is, retained earnings. Okay, so retained earnings that we start with, that's going to be our beginning retained earnings. And this one, you know, this one's always the same with retained earnings. And you recall that the retained earnings is kind of like the piggy bank. So we got a piggy bank. And that's retained earnings is sort of like a piggy bank. And that income goes in, I should say net income. And they take money out with dividends. So the net income is money going into the piggy bank, and the dividends are money going out of the piggy bank. And by the way, this is your second piggy bank drawing. See, that's I give you guys top value. Other instructors don't put the second piggy on there, but I do. So anyway, so it's kind of like a piggy bank. So this is money going into it, and this is money coming out. Same idea. And if the piggy bank's empty, you can't take money out. All right. So let's take it over here. So this is net income is going to go into the piggy bank. So we have net income of 10,250. It's money going in. And that's simply from over here. That's same. So you get it. So by the way, just so you know, you can't do the statement retained earnings until you do this. So it is, you got to do these pretty much in the order that we have done them in. So we need to do number one first, the income statement, because we need the income to do the statement retained earnings. And we need the ending retained earnings to do the balance sheet. So you kind of have to do them in the order that it's shown here. Okay, so net income is money going in. We also have money going out, though. That is the cash dividends declared. You know what's funny? We had the big, I don't know if you got where you guys are at, if you had snow, but we had, you know, where I'm at, we had tons of snow. It's funny, we used to always get up and say, you know, do we have school today? Do we go to school? And now, you don't go in no matter what. So it's just different. But I mean, like snow days would be huge. that one. Okay, so oops, let's put a minus here. So this is money coming in. That's how much they made in the income. This is money going out. And that will give us our ending retained earnings. You know, that's what we should think about. You know, a positive attitude. You know, we should do that with as a positive attitude. We should think of all these as snow days. You know, instead of this COVID thing, which is depressing, snow days. Snow days are great. So, you know, that's what we should be doing.
So we've had 9 months of snow days.
Yeah, wouldn't that be great? I mean, when you're a kid, you always like, you know, you always prayed you'd get 9 months of snow days, and now, you know, now we have
Hey, we'll go with it.
it. All right. Yeah. So this is our anything earnings. I'm gonna do that. Make sure I got that right. Because if this isn't right, then this isn't gonna be right. I added that wrong. Hold on.
It should be 1,250, right? If I'm correct.
Oh, did I do it wrong? For the dividends? I think this is right. I think this is it. Yeah, yeah. Well, yeah. I had the net income twice, so I think the net income. Yeah, so I think this is it. But now, if I'm wrong, we'll know when we get down here. Yeah. All right, so we go to our balance sheet. So this is kind of like the owner's piggy bank. This kind of showing what the owners have, and this number that's the most that the owners could take out of the place because that's all that's in the piggy bank. All right, so coming down here, assets are anything that has a value. Liabilities are what we owe to people. And this is what the owners have. And you know, here's all the stuff you have, and this side shows how you got it. You borrowed money, or the owners have it. You know, so for instance, they kind of like if, well, let's say you buy a house for $100,000, you put 10,000 down, and you get a loan for 90. This would be 100,000. This would be 90,000 mortgage, and this would be the 10,000 that you put into it. So you know, the idea is you got this $100,000 house. How'd you get it? Same idea. Okay, so coming here, we got that. So we're looking at things that have value. Now this common stock, this is only for the equity section, and you can't see it in front of you. This common stock is only for the equity section. So we're gonna ignore that for right now. If this was a stock in another company, that would be an investment, which I think we're going to talk about today. I think in the practice test. But anyway, so this common stock, this is for the owners. So we're looking down here for things that have value, and cash is the obvious one. Now, you look down here. This one might not be obvious, but it's the one we're going to use. This is accounts receivable. This is when someone owes us money, or owes the business money. So this is money that will be receivable. So this will be cash that will be received in the future. So this is going to be an asset, and it's going to be an asset because it's going to turn into cash. So there's a value to it. This is going to turn into cash. Until you get to chapter 5, maybe, I think we assume that these accounts receivables are all good and that they'll all be paid. So this is $20,000 that we're going to receive in the future, so it has a value. And I think that's it for the assets. So these two are the assets here. This is those two. All right. We need this. Liabilities. So liabilities are, the payables are the liabilities. Oh, I didn't add up the assets. 25,000. Okay, and I'm going to put this in here. Total liabilities. If you only have one, you really don't need to do this, but I'll make it. Oops, we need an S on our liabilities. Okay. Last but not least, the common stock. And this was stock that was sold to the owners in the past. So, a lot of times this is a very small number because if you're starting out in a business, maybe it's not very valuable, but as time goes on, it turns into something big. So a lot of times this common stock is actually a fairly small number compared to the rest of it because, again, when you're starting out, the business probably isn't worth it as much as it is now. So anyway, this common stock of 2,000 is with the owners' equity. Now, the owners also have a problem with their camera not being far enough away. Okay, so right, so this is a, so it's retained earnings. Now, this is important. You need to take the ending retained earnings. So we're looking at the ending retained earnings. On the test, if people make a mistake on this, they usually make a mistake of the retained earnings. They take the 12,500, from here, and put that in, whereas actually it is the ending retained earnings that we want. Okay, so this comes down to I should have left myself more room, 21. And so this will be our total equity. Um, 23,750. May want to add that up to be sure, but I'm pretty sure. Yeah. Okay. So this is our total equity. And those two together will add up to the 25,000. Those will equal, and again, this is just explaining, you get this $25,000 worth of stuff, and where'd you get it from? And this side tells you where you got it from. Borrowed 1,250, and the owners kicked in 23,750. So yeah, so that's this is all the stuff you have, and then this side explains how you got it. And again, these don't just come from nowhere. They have to they come from somewhere or someone, and so this side just explains it. Liability and the owners. So borrowing money or the owners putting the money. Question on that thing? And again, this right here is the one that is, if you don't balance, I'd say look at this first. So you go through the thing, you get to the end, it doesn't balance. Okay, well, what do you do? Well, the first thing, make sure that you're using the ending retained earnings. And if you say, okay, I got the right ending retained earnings in that, then see how much the difference is. And a lot of times the difference will tell you what you're looking for. So for instance, if the difference was $4,000, you come here and look for something that's $4,000. Okay, you probably missed the wages expense, or put it in twice. So a lot of times you can figure it out just because of what the difference is between these two. But if they don't balance, first check to make sure you got the ending retained earnings, not the beginning. Okay. That's on that. All right. Look at that. We get one more to do. Yay. And this one is a little bit more involved. And I think what we'll do is kind of, I'll let you guys work on your own a little bit more on this, but this is, I just want to go through here and kind of be sure that we know exactly what's going on with them, what they are. Cash is an asset. How about inventory? Asset? Yeah. So cash is an asset. Inventory is an asset. Equipment we already talked about is an asset. The first one. Payables, these are liabilities. Mortgage payable is a liability. Common stock equity, you get all of those. Here's a new one, cost of goods sold. Cost of goods sold, I am going to stop for a moment and tell you about. Okay, cost of goods sold is when you buy something and resell it, usually for more money, right? So let's say that we buy some kind of a toy. We buy a toy for $6. And we sell the toy for $10, right? So you buy it for $6, you sell it for 10, whatever the toy is. Oh, here, it's a toy car. Look at that, a toy car. So here's what this would look like. For the sale, the revenue would be $10. $10 came in. But notice what happened here, though. We gave up the toy, right? The toy left the place. We no longer have this toy. So cost of goods sold, this really isn't cash going out. This is actually merchandise going out. In this case, it'd be a toy. So, we made a profit of $4 on this thing. Now, intuitively, you already knew that, but so the toy is, you're getting $10 revenue. That's money coming in, but you're giving up a $6 toy. You're gonna make $4 profit on it, but so this $6 is the cost of goods sold. So cost of goods sold, long story short, is just like the expenses. So this is like the expenses. Okay. So it's going to go on the income statement. So let's take a look here. And again, feel free to work ahead here if you want. So revenues. Money coming in. So this is stuff that we sold, and this is the cost of it. And then obviously when we sold it, they left the place. So it actually isn't cash going out, but it's inventory going out. Which is, that's the whole point of it, right? You buy the inventory to sell it. So there's nothing wrong with that. It's what you expect to happen, but this is inventory you no longer have. It's left the place. Oops, but negative. This is 9,200. And repair. Basically all these here. By the way, this is kind of the way you'll see when we start looking at this, the listing of the accounts. You kind of see them in this format, and that usually the assets come first. Right, these are all the assets. These are liabilities. This is all the equity section stuff, except for cash dividends and retained earnings. And then this is the balance or income statement stuff. So usually it goes out in that order: assets, liabilities, equity, income statement. All right, and I never did add the finally net income. All right, let's do that. I did that wrong. 41,400. $11,960 is the income. I'm going to do that again just because if this number isn't right, the rest of it's not going to be right. So do it again just to make sure. Okay. So that's the income. That's how much money they made. And again, that's the most important number on the thing. Because that's the money that you can actually keep. All right. Let's go to, and again, the only new one there, the cost of goods sold, the new one. And again, that's what you paid for whatever it is. Whatever you bought it for, that you inventory that has left the place. So it isn't cash going out, it's inventory leaving, going out. Okay, retained earnings. We start with our retained earnings. This is our beginning retained earnings. Okay, want to see a piggy picture again? Okay, I'll show the piggy picture. Hey, look, the piggy's dancing. All right. So we're gonna add in the net income to this. And then subtract out the dividends. And by the way, same with retained earnings, it doesn't get any more interesting than this. The accounts are exactly the same every single time. You know, unlike the income statement and the balance sheet where they can change a little bit, these are exactly the same every single time. Net income, cash dividends declared. Okay, so net income. Coming in. Just from the first page. And again, these have to be done in this order because you don't know that number until you do the income statement. Oops, should be two. Okay. Cash dividends declared. negative. So this is money coming in to the piggy bank. This is money going out of the piggy bank. They're taking money out. And there's nothing wrong with that. They have plenty of money in the piggy bank to cover it, so. All right. Add that up again just to make sure. Plus. Yep, okay. So this is our ending retained earnings. That's how much is still sitting in the owner's piggy bank. Okay, going down to the assets, we have cash. So cash, inventory, and equipment. To add that up again just to make sure. Yep. Okay. So this is all our stuff, and now we're gonna go figure out how they got all this stuff from. Okay, liabilities. We have accounts payable. And mortgage payable. That's it. $2,300, $11,500. Okay. All right, so this is the total amount that they borrowed. Okay, on the equity section, common stock. $4,600. But we also have I'm highlighting ahead of time. Hey, my highlighter's not really working here. All right, so this is ending retained earnings. So the total equity. So those two together, 37,720 plus 15. Okay. So again, this is, sort of like what we talked about, and that is you got all these assets. And how did you get them? Well, borrowed 13,800. The owners kicked in 37,720, and that's how you got them. I want to go over one more thing just to be a little more clear on this retained earnings. Those retained earnings are not just sitting in cash usually. Usually the owners keep the money in the place to help the place keep going. And you can see that there's 33,120 in retained earnings. There's only 9,200 in cash. So it isn't like these are all sitting in cash somewhere. This is, plowed back into the business. They use some of this for, this other stuff here. So it isn't like these retained earnings are just sitting in a big, and I know I use the piggy bank analogy, but the piggy bank is actually, put money back into the business itself. So, it's kind of like, it is a piggy bank in that it is accumulating their wealth, whatever it is. But usually they don't just have the money sitting around in cash. They say, okay, we can make more money if we buy inventory and equipment with this stuff than just having it sit in the piggy bank somewhere. Okay. Okay, I tell you what, why don't we go ahead and let's take a break. What time is it? 7:51. Tell you what, let's take a break till 7 o'clock, and we'll come back and then we'll start in on the practice exam. So tonight we're gonna do. We just finished the handout, I think. Yeah, the other stuff is sort of a problem. So we finished the handout, so then we're gonna do the practice exam. And then later on tonight, I'll send you guys out the exam itself. And all of it will be due next Tuesday, which is, I think, the 2nd. Yeah, and I'll at the end of the class, I'll go through it again. But yeah, so tonight we'll do the practice exam, kind of walk through that together. And then we'll also go and and see how you turn everything in. And again, you're gonna have a week to turn it in. And later on tonight, I'll send out the actual exam. You have a week to turn it in. It's not a time thing or anything like that. Just you just do it and turn it in, and that's it for the first chapter, anyways. So let's go ahead and take a break. Let's be back at say 7. I'm going to leave this up here actually, in case people still need to look at it. But I'll write down here at the bottom. I'll say. So we'll be back at 7 p.m. So we'll take a little break and we'll come back. The practice exam shouldn't take that long. Hey, easy. Let me do that. All right. Well, next thing we're going to do is the practice exam. Which I somehow managed to lose. You gotta be kidding me. Heck. Wow. I'm sorry, guys. I gotta print out the practice exam again. My apologies. Well, as it turns out, the practice exam was already sitting in the printer. I didn't pick it up. Okay. Well, let's. Again, if you don't have a practice exam, if you get into Blackboard under the files, course files, there's a copy of it there. A lot of these are just kind of definition-y. Some of them are a little more complex, but all right, let's see here. All right, so some of these are, I say, not too difficult. First one, debts and obligations are called anyone? You can also put it up in chat if you want.
Liabilities.
Yep. Number two, we really haven't talked about, but which one of those you think is probably in an asset? Which one of those probably
An investment.
Yep. Yeah, you kind of know that the payable is going to be a liability. Common stock is an equity, and retained earnings are equity. So even if you really didn't know it, you could kind of deduct it. That one is probably the one that's an asset. Oh, this one we haven't talked about. Unearned revenue. And no, Now's as good a time as any to talk about it. Unearned revenue is when someone pays you ahead of time. So let's say I'm going to mow my neighbor's lawn. Or, well, it's snowy out, so I'll shovel his lawn. But no. So suppose I'm going to mow his lawn. And he pays me ahead of time. All right, so $20. So $20, he pays me ahead of time. Here's the thing, until I mow his lawn, it's a liability. Because if I don't mow his lawn, I gotta give him back the $20. So if you get paid ahead of time, it's considered a liability. Eventually if you go ahead and mow his lawn, it's gonna go away. You're not gonna owe him anymore. But until you do that, it's a liability. So unearned revenue is a liability. The term revenue is maybe a little it's not a good one, but unearned means that you owe them. And basically, if you don't do what you're supposed to do, you got to give them the money back. So unearned revenue is sort of different than an accounts receivable. Accounts receivable is when you do something and someone owes you. So if I mowed his lawn and he hadn't paid me yet, it would be an accounts receivable. This is sort of the opposite. Unearned revenue is when they pay you ahead of time. Before you do anything, they pay you. And now you owe them either the service or you got to give them money back. All right, so that's why that one's the unearned revenue is anything unearned is always going to be a liability. Okay, well, so unearned is a liability. Payables are liabilities. So we actually had this one today, right? Accounts receivable is not a liability. That's when someone owes us, that's an asset. Do this a little bit closer. All right. Number 4. Ending retained earnings is equal to AB's. Yes. Yep. Right. Yeah. Plus income minus dividend. Dividends are reported on the
Retained earnings statement.
Yep. And that's the only place they're at. And I'm gonna write something down here. Dividends are not expenses. They're simply payments to owners. There's nothing given back for it. If you think about expenses like your phone bill. Okay, you use the phone for a month or whatever, and they send you a bill and you have to pay it. They gave you a service. There's no service here, when it comes to dividends. Dividends are just simply money being paid out to the owners. The owners don't give anything back. The owners don't give back inventory or anything else. It's just payments to the owners. So these are not expenses. They're not on the income statement. So dividends are just payments to owners. And again, there's nothing given back. The legal term is consideration. There's no consideration given for the money. It's simply income. Okay. All right. So the Henson Company began the year with retained earnings of beginning retained earnings were add revenues and expenses of that. They pay dividends of that. What was Hunson's retained earnings at the end of the year? Okay, well, we will go to our, I'll do it over here. Our retained earnings statement. We have beginning, retained, that's a D, earnings. And remember, the formula is plus net income minus dividends. Okay, so the dividends are fairly easy, they tell us. However, the net income, they don't tell us, but we can figure it out. We have revenues and expenses. Let's see here. We have expenses. So this will be our net income. Whatever that is, 120. These aren't. But it's late at night. I better check to make sure I'm not doing something stupid. Okay, so the net income 120, so this will be plus 120. This is and let's see. Ah, 410,000, I think. 335. No, 450. Yeah, 410. 410. Is that B? Okay, let's go to page 2. Page 2, number 7, they give you all this information. They issue common stock, they pay dividends and all this. But look at what they're asking for. Their net income. So how would you calculate that?
Revenue minus expenses.
Yep. Yeah, well, they give you a bunch of information you really don't need. So in this case, you just need the revenues. And the expenses. This is the income statement stuff. 20. So, this is all you need. $50,000. Make sure. All right. 8 is actually probably one of the more difficult ones we have. So they started the year with assets of 140,000, total liabilities of 80,000. During the year, the business recorded 220 in revenue. Expenses and dividends of 40,000. And they're asking, what was the stockholders' equity at the end of the year? Okay, so before we should get started here, so this is they want to know what the equity was at the end of the year. How can we find what the equity was at the beginning of the year? They don't actually come out and tell us what the equity was at the beginning of the year. So how can we figure it out? No one? Oh, come on.
I want to say we subtract the revenues from the expenses.
We're going to need that to get the ending, but how do we get the beginning equity? I'll give you a hint. It's in the first sentence there. We have assets of 140,000 and liabilities of 80.
We grab the assets and subtract the liabilities.
That's exactly it. Yep. Yeah, remember that our balance sheet has to balance, right? So this is our. So if we have assets of and we have it has to equal our which is 80,000 plus our equity, and we don't know what that is. All right, well, if we subtract 80,000 from both sides, like you mentioned, if you just subtract out the 80,000, I'll tell you what the equity is. So you'll end up with, so it looks like this: 80,000, 140,000 minus 80 is 60,000. So this is our beginning equity. Okay, so we now know what our beginning equity is. $60,000. And now you're right, the revenues and the expenses, we're going to need those to, I'm crooked here. We're going to need those to figure out. Now, notice they don't tell us what the actual retained earnings are, but we do know that retained earnings are going to change the equity section, right? I mean, it's the retained earnings go into the equity section. Now, they don't tell us what the split up is, how much is common stock and how much is retained earnings, but we really don't need to know that. If they, if they didn't sell any other stock or anything like that, they don't tell us that they do. This basically becomes sort of like the retained earnings statement. That this will change by the net income and the dividends. Another thing about, I should probably mention this. Another thing about when you're reading these problems, don't read anything into them that's not there. I teach the CPA reviews and stuff. I've done that for years. And you can get into real problems when you do questions that they don't ever add things in that aren't there. So you may say, well, suppose they did sell stock. It doesn't say they sold stock. So, if it's not there, don't assume that it is. So if they don't tell you, assume that it's not there unless they have said it. And they don't give you any indication that their stock was sold. Okay, so we know what the dividends are. They're 40,000. We need to do an income statement. And I don't like the numbers they used here, and I'll tell you why. All right, so I don't like the numbers here because the expenses are the same as the net income. That is not usually the case. That's an unhappy coincidence that those are the same. But this one, 110,000 is the net income, after this. But there's that's not usually the case. It'd be a very odd thing to have happen. Could it happen? Sure, but very odd. Okay. Yeah, so C. It's supposed to be net income. I'll rewrite it using real letters. Okay. And again, this is sort of along the same format as your retained earnings statement, because nothing else there would have changed in the equity section other than retained earnings. And that's not unusual. If the company doesn't issue more stock, the retained earnings are the only thing that does change in it. Okay. Total liabilities, number 9. Total liabilities decreased by 50,000. Stockholders' equity increased. One of my markers couldn't take it anymore. Jumped off the desk. Okay, so total liabilities decreased by 50,000. Stockholders' equity increased by 10,000. So what must have happened to the total assets?
A.
Yeah, I think you're right. Yeah. So this would be. Yeah. So our assets have to equal our liabilities and equity. So liabilities decreased by 50,000. And there's another marker. How much of a jerk you have to be when your markers are running away? All right. Equity increased by 10,000. So the total change for those two must have been minus 40,000, right? So that's what you're gonna have to have over here also then. Whatever, we don't know which assets went up or down, but we do know that these two sides have to equal, so this must be minus 40,000. If this side went down by 40,000, then this side has to go down by 40,000. So yeah. My orange marker never ran away from me. See? That's a good, who's a good little marker? Who's a good little marker? Okay. We already did this one, didn't we? I think I got the same one on there twice. Maybe not. Oh, yeah, it's pretty much the same question. 10 dividends appear on the
See?
actually it's going to be A. Now the retained earnings go into the balance sheet, but the dividends themselves only appear on the retained earnings statement. Kind of like kind of like this thing. Okay. Orange marker just left me. Oh man, my markers are leaving me. So here's where the dividends show up. Now retained earnings goes down here, but you don't see dividends down here. Now they're included in the retained earnings, that's true, but they only appear on the statement of retained earnings. All right. The last thing is this, the income statement, and I think I have this set up. Hopefully it's set up correctly in that you guys can fill in the blanks on this. Took me a while to figure out how to do this today. It probably shouldn't have, but it did. So hopefully we can simply fill in this. Now, you don't have to use this. You can print it out. You could, you use this thing if you want. But if you like, you can also just fill it right in here. Okay, what's going on here? Gotta do something here. Sorry. Okay. So I think we should be able to put right in here. Now, there is something unusual here. You take a look at this and say, whoa, whoa, what's this? We have two different columns. We have debits and credits. This is kind of jumping ahead a little bit. This is what we're going to do in the future. We're not going to do it, probably won't do it till next week. But the, about, what amounts go where, we don't need to really know any of this right now. All we need to know is that, say, cash is $1,200. Debit, credit doesn't make any difference. And for all of these, whatever number they have, don't worry whether it's a debit or credit. That'll be a future adventure that we'll go on. But we don't really need to know debit or credit, but it's kind of introducing it a little bit ahead of time. But everything in here is pretty much the same. Most of the stuff that we've seen here is something we've seen similar of before. Okay, so what we're going to do is put stuff into our income statement from here. And again, you can do this, however you want to do it is fine. If you want to do it by hand or if you want to fill it in here. I just put this here because it might be easier to. All right, so income statement, we start out with revenues. 5,400. Would you guys rather see me do this by hand? It makes no difference to me which way I do it.
The computer is clear.
Yeah, it's easier to read too. As another, I'm gonna go ahead. I'm gonna make these all one color so they all look, so you know where they're coming from. Okay. And we have our expenses. Yeah, let's make those red too. So cost of goods sold. You cut and paste these too. Yeah, I'll color them all later. Oops. All right, so this will be all the income statement stuff. I tried to get this last one to put the box around it when I was working this out, and I couldn't get it done. I must have tried to format that one like a dozen times. But I said, okay, forget it. No one's going to care. Okay, so we'll have net income of whatever those are. That was a 1620. I'm going to do that again just to make sure. All right. Yep, so 1620 is it. Okay, going on to statement of retained earnings, we need the retained earnings, and we're also going to need the dividends declared. I'm going to make those blue. Okay, so our beginning retained earnings need to abbreviate that. Net income is simply from up here. Plus. I'll do that later. So let's see. So this will be blue. It's blue. And so let's give us our ending retained earnings. All right, I have 43.80. I'm going to do that again just to make sure I didn't do anything stupid. Okay, so this will be our ending retained earnings. Yeah, those look funny. I'm gonna change them. Change the ending ones back to black so they stick out a little more. Okay, so yeah, net income 1620, retained earnings of 43.80. Coming down here for assets, we have all of those for assets. And the correct color for assets would be, how about, I'll go with green. You actually, you could just cut and paste them if you want. Nothing wrong with that. Oh, that is not what I want to do. missed something. Inventory should be 720. I'm sorry. That up again just to make sure. Okay, that was it's right. Okay, liabilities. Here's liabilities. We'll make those. Make them golden. Okay, so accounts payable. Okay. So anything that's there's a payable is going to be a liability. Unearned will also be a liability. We don't have any of those. So taxes payable is we owe the government. Bonds payable are kind of like loans, kind of like mortgages usually. It's 1860. Oops. Better check that though. 300. 16. Okay. And coming down here to the equity section. All we have is common stock in retained earnings. Common stock will leave black because it's all the other ones are different colors. So this will just be good. All right. So common stock. $600. Our ending oops. Any retained earnings was 4380. So our total is ooh, that's not even a number. New rule, we'll use numbers in all these and stuff. Okay. I tried using that numbers and it didn't really work out very well. So, okay, so 600 plus 43. Yeah. Okay, and so these, so 1860 plus that should come out to that. It doesn't. Let me try that again. Okay, so 1860 plus. It does come out. Why'd you guys say it didn't? All right. And so those two balance out, and yeah, so that's what it looked like. On this, don't worry about these totals. You know, what happened to the 10,000 860? It's for what we're doing, it's a meaningless number. But this would be, yeah. So on the test, you can type it right in there. And again, if you want to use the, you know, if you want to use this instead, that's fine too. You can write it in there and take a picture of it or whatever. Absolutely fine. You don't have to do this. And you certainly don't have to color coordinate it, which is probably more confusing than anything. But yeah, any questions on that?
No.
Yeah. So if let me see here, back up. Yeah. So again, you don't have to use this thing if you don't want to. But okay. So what's going to happen next? So you guys have done. You guys completed the handout. You completed the practice exam. So you can turn those to. Oh, I know what I need to do. I want to do. I want to show you guys what happens for. Let me stop share for a second here. Hey, camera's on the ground there. So let's see. I want to need to get into. I'll show you guys how I set up the stuff. This will be, if you're ever wondering how this stuff gets set up. So you're going to go into accounting 210 and or 403, depending on what you have. And so here's the assignments. There's no assignment in there yet. I'm going to put one in. I'm going to put an assignment in. And the assignment will be oops, that's not right. Accounting 210, chapter 1 handout. Come down here, due date. The due date will be February 2nd. Now, I accept, I do take late work, but on that due date, it's going to be part of your grade, right? So, I mean, you can turn stuff in late, but your grade's going to look bad until you do. So, you know, don't get too crazy about the dates and then, oh, I could get it in. Whenever you get it in, it's fine, but it's not going to show up in your grades, obviously, until you get it in. And I encourage you to kind of keep up because the early stuff on here kind of builds. But this is the due date for it. And so when you turn it in this next week, whenever you turn it in, it won't go into your grade to date until the 2nd. Number of points, they're all going to be 100 point. Submission detail. Unlimited attempts, highest graded. So you can turn in 10 pictures. If you want to take pictures of the handout, turn in 10 or 10 pictures of your notebook, turn it in. As many as you want to turn in is fine. if you do turn something in and you don't turn it in completely, or you turn in the wrong thing or whatever, you can always resubmit it too. I take it, it's resubmitted also. So, okay. And I think that's it. Oh, okay.
This
So
is for us to submit the handout we just did in class.
exactly. So submit all coursework here. So this is gonna be the handout. I'm gonna put another one in right now for
I thought the handouts were basically just for like note, I guess, like purposes. So we actually have to like turn them in every time.
Yep. Everything we do gets turned in. And it counts towards that 20% of your grade that is for handouts and practice exams and textbook problems, which we haven't done yet, but yeah, they all get included. And now, if you didn't take notes on those, the from last time, it is up there that the Zoom meeting is recorded, so you can go back and look through it. And this one will be up probably later on tonight, probably like around midnight or something. Will be up. So this will be the practice exam. And again, however you want to put it in, it's fine with me. Due date. Second. Again, all these will be unlimited. And last, and certainly not least, will be I don't need to put this in every time, finding 210. I should probably just put it as a chapter 1 exam. I mean, you already know a classroom, so. And due date be the same. The second. So we could turn it in. I should get that out to you later on tonight. Again, it's 100 points, but now exams are worth 80% of your grade. So this is actually a bigger chunk of your grade is going to be the exams. The one thing you don't want to do is not turn in exams. You can miss a homework assignment or a handwork out or something like that, and probably won't hurt you too badly. But you do want to turn in the exams because they're the bulk of your grade. So unlimited attempts, highest grade. Okay. So here's where you're going to submit them. So chapter 1 handout, the practice exam that we just did, and the exam when I sent it out to you. So these first two, these are in the 20% category. They count for 20% of your grade. This is in the 80%. So make sure you get those in. They're due a week from today. If you don't get them in, don't worry. It's not the end of the world. But you do want to get it in because it's not going to be included, obviously, until you do get it. Those of you who your emails aren't working, if you could send me an email from your personal email or however you want to be, I got to get you an exam. So if you want to send me your personal email, send it to my school account. I can use that to send it to you. Yeah, so because the exams are sent out to individuals. When you get the exam, make sure you turn in the exam you were sent. Don't turn in one you weren't sent or something like that. So yeah, but yeah. So if your email isn't working, and you can find my emails are, it should be anywhere. If you look under instructor, yeah. So either one of these emails is fine to send it to me. Send me your email address so that I can get you the exam if you have a personal email address. But yeah, we definitely. If you do have a problem with your email, if you send me your personal email, then I can send that on to the tech people and get them to figure out your email account too. So if you're not getting your email, send it to one of these email accounts from your personal one, or if you have a work one or something like that, and I can also forward that to the tech people, because you guys you have to have a working email account. If we're gonna do distance learning, you gotta have that. So, all right. Any question on it? So yeah, if you go to submit coursework here, this is where it all gets submitted. Question on that? Okay.
Professor,
Yeah.
is there a specific heading you want on these handouts, or just put our names?
Everything's fine. Yeah, and the way it works is that whatever's on there, it's like I'm looking at somewhere else. It goes into your specific Blackboard account area. So you don't have to get too crazy with what you put on there. And if we do, I do download them all usually at the well, it's gonna do it like halfway through, but usually at the end of the semester I'll download all of them. And even on those, it puts a tag that shows your name on it. So you don't have to worry too much about the naming of it.
So, and it was 2 handouts today, right? Correct.
There's a chapter, yeah, the chapter 1 handout, and then there's the practice exam. So those 2 will get turned in. I have to send you the exam, and later on tonight you'll get sent that. So and that has to be turned in also. So you'll basically turn in 3 things this week: the handout, the practice exam, and the exam for chapter 1. And then we'll be done with chapter 1, and that's it. We're not going to do anything else until next week. We'll start it on chapter 2. And again, we're going to go a little bit slower on these first few chapters. If we don't get the first few chapters right, the rest of them aren't going to make sense. And even if you say, "Oh, I'm pretty smart," and I catch on to it, we should be working faster. You teach to the middle of the class, and so if believe me, it speeds things up. It may not seem like it, but it speeds things up to take more time in the beginning. And then you can, once people get a good base, then you can go faster later on. Yeah, so again, yeah, if your email isn't working, or if it's erratic at Roosevelt, go ahead and send me from your personal or your work email account, and I will forward on to our techs here to have them take a look at it and get a hold of you and see what's going on with it. It's not unusual. I've had several students, including myself, that have had problems with the email. So, okay, any other questions? Okay, so later on tonight you'll be getting that the exam. Again, you got a whole week to turn it in. There's nothing urgent about it. It doesn't have to be turned in the next hour or anything like that. You'll have until next Tuesday to turn it in. So, any questions? Okay, well, that's probably enough fun for tonight then. All right, if you have any questions, you go ahead and email me, and we can figure it out. Okay. Well, I'm gonna put where's my? I can't put Piggy up again. I gotta put my. Oh, there's my dog. I put my doggy up so that I know when the end of the thing is. Okay, I'm gonna make it dance, just like the piggy.